Hi everyone, welcome to this video about how to prepare yourself as a great trader for the next week. Because if you watch this video carefully and take this analysis as a trading compass rather than buy sell signal, where this compass can give you a more update with respect to what could happen in the markets in the coming days. I would be much more interested in talking about some of the key events, at the same time looking a particular asset which is gold, XAUUSD, some of the similar patterns which I have observed myself, and we'll be deep diving into the technical analysis part where we have FOMC meetings on Wednesday 7 p.m. BST UK time. At the same time, we do have Thursday 3 p.m. where Fed Chair Powell speaks as well. So based on these big events, even unemployment claims are there, flash service PMIs are there, manufacturing PMIs are there. So these are the particular event which gonna affect this particular week. Let's see how we can prepare, and this is purely based on gold analysis. So those who are looking for trading with respect to gold, keep this as a trading compass with your analysis, so that you can easily navigate. If something what we are going to discuss ahead is playing out very well, you can navigate your compass accordingly. So let us get into the gold analysis. I usually watch for the 20-day candles, where I believe that 20-day, 40-day, and 60 days the periods where we have a great potential moves on a positional biases. When we look at this particular candle on a 20-day, let's do a simple 20-day analysis. With respect to this, we can see a volume is getting reduced with respect to buyers, even low volume we can see. At the same time, market has taken out this liquidity, this particular liquidity, which has rallied all the way from a let's say last November. After Trump's election, the dump has happened, and then gold become the safe haven for more and more investors who are betting on even including tariff, Ukraine-Russia war scenarios, and much more geopolitical scenarios. But here we have seen the all-time high have been taken out, and the market closed below. We have 5 more days for this particular candle to close. So we are just trying to analyze the market with only 33% of the data, and thinking in probabilistic perspective, rather than this being okay, this is what going to happen. No, this is just a probability, this could play out, or this is market. So make sure that you are seeing with respect to that mindset in the further analysis. So let us deep dive into the analysis. This got turtle souped. Earlier few people called this as a box strategy, and then new generation calling it as a turtle soup, as we have discussed. And this candle range theory, most of you would have aware of. Let's say if you want to discuss about the candle range, once the candle range is taken out and then pushing downside, it has higher probability to push all the way towards the candle low. So this being the candle range were closed, the bullish sentiment where we have seen which is diminishing, and a consolidation started beginning, right? So this is the zone which I'm looking at. But at the same time, let's go back and see a detailed analysis. It could be the first target could be, let's say for example, we will come back to this particular chart and see why I'm looking for a short opportunity in gold, and the reason also we can deep dive into it. Let's come back to the gold spot. If you look at this symmetrical pattern, this could act as a bullish pennant, with respect to pattern trading, but at the same time it can act as a breakdown, markdown, and then pushing all the way down, taking out this liquidity, this one, and even this one, even the lowest one. But that has to, play out really, really bad. But let's see, on a weekly time frame, we have seen, let me just remove these things so that it will be much more easy to have a look. So weekly time frame, we have seen market trying to push upside and coming back, basically a great consolidation, right? A great consolidation has happened. Let's discuss till here. Okay, so the inside this consolidation, market have taken out all the weak players and dumped all the way down and pushed higher and then dumped. And if you think from a spring perspective, when there is a spring is compressing more, it explodes furthermore, right? So similarly, the explosion has just begun. We have seen last week particular candles, if you see, it has dumped all the way down. And this sell-off, I was expecting if market was playing a similar scenario like this. So previous week I was expecting a solid sell-off or a similar kind of a thing. Let me just go to the 4 hours and try to explain. So last to last week Friday, the sell-off which I was expected, and then if the market was closing towards 4020, then I was expecting a gap down opening all the way down, but that didn't happen. And because that didn't happen, I was staying away from the market, keeping this particular long short bias. When I say long short bias, this long target with respect to short bias. But what has happened last week was quite interesting. Let's say market opened and bulls tried pushing the market, but that didn't happen, and then dumped all the way down. And even this particular candle, if you observe, if you go back to let's say the volume footprint chart, let me take you through the volume footprint. And on a 4 hours time frame, you'll be able to see a massive buyer's push and a solid buy side imbalance, which we can see on volume footprint, which has happened on the last NFP. So on the NFP push, market has pumped all the way up, and earlier last to last week, let's say on 25th August, it just tapped into that buy side and pushed upside, but buyers couldn't sustain. Another tap has happened last Friday. Let's see what is going to happen from here. Okay, so you can clearly see that there is a buy side orders pending. If you closely watch the whole particular candle, then you'll be able to identify what is the strength of the buyers as well. So you can see a solid bullish candle with the volume spike. And let's go back and check what is the delta for that particular 4-hour candle. Out of 90k orders have placed, positive delta is 22k, right? If you just closely watch this particular orders and this particular area, we have around more than, what is the order size? Let me just, okay, from here to this way, right? Okay, all the way here. So we can see, yeah, around 90 plus lots are there on an average on the bottom side. So this starts with 94 orders, 94 lots, and then all the way up to 25 each. So if you closely watch this 25 lots each, some institutions have bought it heavily, they pumped it, but right after this push, this particular area, this is the NFP move which has happened. Right after this, they are dumping it now. So these people have already booked their profit. That's what I think, in my opinion. And what I'll be closely looking for Monday and the coming days play. So there is a turtle soup, which is the smaller time frame, which is in, let's say, on a 30 minutes time frame. If you look closely, which has happened right after taking out the 3331, which was the low I was expecting, and posted in our community as well. So those who are completely new watching this video, please make sure that you guys join to the community and watch how our traders are getting benefited. So this turtle soup has happened, and thank you so much for Dennis, who have helped me to learn this particular concept. Even though I was watching and I was always trading with respect to liquidity and imbalances, particularly this concept has helped me to fine tune the strategies and keep the targets as such. So the 50 percentage range have been taken out, and with respect to my experience earlier trading within liquidities and imbalances, after tapping into the 50 percentage, buyers couldn't push. So last day I was waiting whether after taking out 31 market is going to push upside, but no, that didn't happen. But I was waiting for a zone of 3320 to 2324 levels to enter to the market, where the buy orders are heavily pushed, more than 25 lots. You have seen with respect to volume footprint, right? So from next week Monday onwards, I'll be watching a play market dumping this particular channel. Let's say this could act as a, let's say, a trend line liquidity which is dumped all the way down, which could be an scenario where we can see something similar to this. So some good sell-off candles, if it is forming on a 4-hour time frame, if a another 3 more consecutive candles, if it is forming, I won't be surprised, because the 5 consecutive candles can end this particular let's say trend and emerge with respect to forming a new trend. Okay, so even on Monday opening there could be a sharp sell-off. If this happens, then I'm seeing a push towards upside. So there is a tricky question I'll be asking myself, whether the whole range, if you can see, this is the 61% range with respect to this whole internal structure. Okay, so my question is whether the market is coming back and tapping into this particular level, or whether this push is still extending till this particular zone. So question number 1, Monday onwards, are we seeing the market going to tap into this particular level and then reverses back? If X is happening, let's say, let's assume the fact that if the market is coming back and tapping to 3322 and pushing all the way upside, then the market could push all the way upside to the weekly order block. Let's say if you look at closely on a weekly time frame, this is the area where sellers have dumped their entire positions from longs, right? So this particular area could act as a next candle's high. So if I take out okay, so the candle could open here, right, and then push all the way down and form a wick from a 61% point of view, and then form all the way up. Now what most retailers do, retailers think that, okay, from this perspective market have taken out this view and then market is pushing upside, so let us go long. That's what most people do. If data is very strong for USD and then US dollar strengthens, this could act as a solid sell-off, which we have seen from the news events. And then all these people who have entered from here and here got trapped and then dumping all the way down. This could be the 50% target for gold, and the 100% target would be 3119 or 3120 levels, right? So that's what I'll be focusing on. But if market didn't play out as we expect in this scenario number one, what if the market is pushing downside and the numbers are bad for DXY, and then what could be the scenario? Let's say market won't stop here and reverse it back. So the first scenario which we have discussed, market should stop and reverse it back, and then from 64 level onwards, 2 4-hour candles should not close above this level. So similar way, you can see a 1 4-hour candle pushed all the way up, but if you do the candlestick addition from here, let's say this is the opening price and this is the closing price of the first candle, right? And this is the wick for that particular candle. So this is the wick which has started all the way up. This is how you can see from the first candle. But when the next candle opened, this is the opening, and it closed all the way down below. That makes this particular candle anatomy, if you do the candle addition on the candlestick anatomy, you'll be able to see that this is a solid hammer pattern, right? It's a solid sellers regaining strength and keeping the bearish mode. So if this happens again at the weekly order block, then it could act as a, let's say, let me remove this. That's what we are going to discuss next for the the second thesis which can play out in the market. Okay, so if market is rejecting from the zone, and then we can expect a solid push beyond this level. Those who are willing to risk, let's say $25 at this point, would gain, or there is a probability to gain at least a 164 point. If you are still bearish, you can even target for a 244 points on. When I say 244 points, it's a lot with respect to gold, you know that, right? So if I go back and see those who are very moderate and do not want to enter into a risky position, I would suggest, no, this is not a suggestion again. Okay, I would do, rather than this particular candle closing below this particular level, which is 3346 on a futures price. So below closing level, even we can risk up to $23 to gain a 111 points for the first target and 376 points for the second target. So this is how I'd be planning myself for this particular week with respect to gold. Okay, the scenario number 2. What if the numbers are too bad and geopolitically, people are pushing gold as a major currency, and it's also plays out this bullish scenario, and this plays out as a bullish pennant, and this could act as a, let's say, a solid fake out. If it is a fake out, then this will not happen in my opinion. What is going to happen is, this 3 candle formations which has happened, it could push beyond this level and come back to this optimal trade entry for this whole internal structure. So this is the internal structure, right, which has happened from 3269 to 3400, wherein this is the external structure which will act as a solid protected low, and then this could act as even protected low, and then this could come back and tap into this level, push all the way to upside to get a even all-time high beyond the higher all-time high is 3500, but beyond that level even we could get a push that could even lead to 245 points upside. Those who are playing it safe can book first target as each liquidity zones can be act as first target, second target, third target, and fourth target could be all-time high. So when the market is rising all-time high, we don't keep any targets, right? Let it ride and change the structure in 4 hours and then make a decision accordingly. So either bulls or bears are going to win, but those who are getting trapped in between this particular zone, okay, if you're scalping, then that's completely fine, because this range is for a positional traders, it's a no trading zone. So those who can't play out or change biases quickly can wait and watch which side. It could be 3284 to 3384. Okay, within this $100 move, if you can wait patiently, breaking either side and confirming could give you a solid move in the gold. So make sure you guys are doing your own analysis. This is just an educational video, and please do let me know what are your thoughts and comments, those who are looking with respect to any other strategies, any other structures with respect to gold and trading with respect to gold. Okay, so let's see who's going to win this tug of war, whether bulls are able to maintain their momentum with respect to 3323, or the bears are going to fight and dump all the way from 3364. It could push even. So don't think each level and each zone is going to act precisely. It has done before, but it will never ever do that every single time. So I am keeping myself humble enough to say that this is just an analysis and this is not any prediction. Okay, thank you so much and all the very best. Wish you nothing less than success ahead.